Primera Corporation has provided the following data concerning last month's manufacturing operations. Prepare a schedule of cost of goods manufactured and the cost of goods sold section of Primera Company's income statement for the month. Rather than prepare a schedule of cost of goods manufactured, we're going to record our cost information on a flow chart and track our cost from raw materials into work in process and finally over to finished goods. And in doing so, we'll calculate our costs of goods manufactured. Let's begin by recording some of the information we're given regarding our inventory balances. We're told our beginning raw materials inventory balance is $12,000 and that the ending balance for raw materials inventory is $18,000. Work in process has a beginning balance of $56,000 and an ending balance of $65,000. Our finished goods inventory had a beginning balance of $35,000 and an ending balance of $42,000. Now let's go ahead and record some of the transactions that took place during the month. We're told that raw material purchases were $30,000. This will be in addition to our raw materials account. Direct labor or indirect materials included in manufacturing overhead were $5,000. This would be a use of raw materials, so it would be showing on the right-hand side of our raw materials box as an outflow. Our direct labor, we're told, is $58,000, and direct labor is recorded directly in work in process inventory. So we've got $58,000 flowing into work in process. Our manufacturing overhead applied to work in process is $87,000. This will be an outflow from our manufacturing overhead and an inflow into work in process. Finally, we're told during the month we had underapplied overhead of $4,000. This means at the end of the month we would have had a debit balance in our manufacturing overhead account. We don't need to calculate it to solve our problem, but if we wanted to, this means that our actual manufacturing overhead would have been $91,000. This would have been our $87,000 applied plus the $4,000 in underapplied overhead. All right, let's go ahead and finish off and complete the empty spaces on our flow chart, beginning with raw materials. We had a beginning raw materials inventory balance of $12,000 and we had purchases of $30,000. This means that we've got $42,000 of raw materials available for use in production. If we used $5,000 for indirect materials and we had $18,000 left over, this means that our raw materials that were issued to work in process was $19,000 in what we call direct materials. Again, we had $42,000 available. We had 18 left over, which meant we used 24. And if 5,000 of this were for indirect materials, that means that direct materials would have been $19,000. Let's move over to our work in process account and calculate the total cost that we need to account for. We had $56,000 in cost left over from partially completed units from the prior period. That's our beginning work in process. We added to that $19,000 in direct materials, $58,000 in direct labor, and $87,000 in manufacturing overhead, which brings our total cost in work in process up to $220,000. This cost will either need to be transferred out as cost of goods manufactured or left in ending work in process inventory. Since we're told ending work in process inventory is $65,000, this means the cost of goods manufactured will be $155,000, and we can see that cost flow out of work in process and into finished goods. In our finished goods inventory, we had $35,000 at the beginning of the month. We added $155,000 in terms of cost of goods manufactured, which means our goods available for sale is $190,000. If we've got $42,000 in ending finished goods inventory, this means our cost of goods sold would have been $148,000, and we can see where that cost is flowing onto our income statement. Next, we'll pick up our $4,000 in underapplied manufacturing overhead. Underapplied overhead means that our work in process account was too low by $4,000. In other words, our actual manufacturing overhead was $91,000, but we only assigned $87,000 to or applied that to work in process. It was too low by $4,000. As our costs moved then from work in process into finished goods, our finished goods would have been too low by $4,000. And as our cost moved from finished goods to cost of goods sold also would have been too low by $4,000. The journal entry to increase cost of goods sold and close out our manufacturing overhead will be a debit to cost of goods sold, an increase, and a credit to manufacturing overhead. Finally, this means our total cost of goods sold for the year would be $152,000. This would be the $148,000 in costs that were transferred in from finished goods, plus our $4,000 adjustment for our underapplied overhead.